everybody. Thank you for joining us for another one of our webinars. This is quite a unique webinar. We have not had a founders chat for a long time. So happy to have my co-founder of Global Mortgage Group and American Mortgages, Donald Clipp, on with me to discuss not only the recent rate drop, but some really amazing enhancements for our business, which certainly adds value to you as clients and to our loan officer team and so forth. So Donald, thanks for joining. It's been a while. I'm glad you're able to make the time for this.
Come on, I'm super excited. We haven't done one of these in a while. I'm really excited to engage our audience and our community, and I really appreciate everybody tuning in 6 p.m. Asia time to listen to this presentation. There's a lot of stuff you read in the news. Interest rates have been coming down. There's a lot of reasons on why that is. But the bottom line is they have come down. So to the extent that you are looking to potentially buy real estate or invest in U.S. real estate, you want to get an update on the key factor in that decision, which is the cost of funding. So looking forward to kind of discussing that as we speak. So let's get started.
Yeah, so how this webinar will go is we will talk about the recent big updates that we have for American Mortgages, and then we will discuss the recent rate drop and why, and sort of our outlook on what's going to happen with the U.S. real estate market. And then we'll do our normal going over the loan programs, and then we'll have a question and answer session. So during the process, if you do have any questions, please put them into the chat and we will answer it towards the end. One thing as well, if you want to use our new platform, which we will discuss shortly, you can apply for a loan directly through the chat, or you can arrange a time to speak with one of our loan officers. Our loan officers are based all around the world, and it is literally a 24/7 schedule. So with that, Donald, let's start. I shall share.
Yeah, let's do it.
Okay, so U.S. mortgage loans for international clients. That's what we do with American Mortgages and Global Mortgage Group, as everybody is probably aware. Our big updates. So for the loans in general, we have seen a decrease of at least 1% across the board. So Donald, I know we were talking about this earlier today in the office. Now, if you look at where we were pricing foreign nationals, for example, just 2 weeks ago, they were around 8.5%. And I think today we priced something out in the very high sixes, which is absolutely amazing. Okay, one of the other benefits that or updates that we have is we used to have, when we first started, a minimum loan amount of $150,000. I'm sure you remember, and that has been a consistent request for our clients. So we've recently been able to reduce our minimum loan amount to $75,000, which is huge for a lot of our investors that own a lot of smaller properties. So now with up to 75% financing and a reduced loan amount of $75,000, Donald, I think we've really been able to make it to where almost anybody can be a real estate investor. I don't know if you have anything you want to add on that.
No, the lower loan amount has really opened up opportunities in some states where the cost of the homes are much cheaper, and that makes it very attractive for a real estate investor. If you're investing your disposable income, obviously you could buy some stocks, you could buy some crypto, but if you wanted to buy a home, for example, in Manhattan or Los Angeles, it's hard to come up with $1 million for 50% loan to value for a $2 million home. However, there's a lot of growth opportunities in the Midwest, for example, in Ohio and Michigan, and those loan amounts are smaller. So this lower loan amount allows an entry point for a bigger and wider audience who want to take part in this amazing investment opportunity, which is U.S. residential real estate.
I mean, excellent. Well stated. So I'm sure a lot of people are aware of our interest-only program. I think this is one of the key features that we have as a company that is super attractive when it comes to investing in U.S. real estate. And just to cover it a little bit, our interest-only program is a fixed rate for 10 years. Now, that 10-year fixed loan, you're only servicing the interest for that 10-year period. After the 10 years, that loan will not reset. It'll stay at that same rate, but now you're paying principal and interest. So you're looking at a total 40-year tenure. And I think what makes it super attractive, especially as rates come down, you're really going to be able to take advantage of the yield of a property. And you assume after the 10-year period, when that rate converts into a principal and interest 30-year fix, your rental rates are going to be significantly higher. Wouldn't you agree, Donald?
Yes, a lot of, the purpose of real estate investing or investing in general is to maximize, your cash flow. And so if you can have 10 years where you're not paying principal and just paying the interest, it means for those 10 years, you are maximizing your cash flow opportunity, i.e. rental income for those 10 years. Now, obviously in 10 years, the property price is going to go up and it allows you more financing options down the road. But if you're strictly looking at earning as much rental income as you can over a period of time, this is the best option.
And I think one thing that also makes it very unique too, specific to the US, is there's no age restrictions. So whether you're 19 or 99 in the US, they feel you should all have the same opportunity when it comes to housing, which is considered also for the mortgages. So no age restrictions, as in most countries, it's going to be either limited to a specific age or to a working age. So it makes it quite fantastic. All right, the next big update, and this is something, again, much like the reduced loan amount, we've been getting requests on a regular basis. And that is, if you buy a property, you renovate it, and you improve the value significantly, we used to have to wait 6 to 12 months before we would use the new appraised value. We're really excited to announce that we've reduced this to only 3 months. So, I mean, I think, Donald, you have a very good example of this for clients out of Singapore. So maybe you can kind of give a little bit of an explanation on that.
Yeah, I think for those of you out there, these sophisticated investors, which is our audience listening right now, you will likely have stumbled across a investing technique called the Bur Method, which is buy, renovate. Okay, let me get this right. It's buy, renovate, refinance, rent out, and repeat. And what that means is, you buy a home that's undervalued. Let's just, for example, in the neighborhood, it's 250,000. You see a home that's worth 150,000. You go to Home Depot, you engage a contractor, you spend 10, 20,000 bucks. And once you're done, it actually is worth $300,000 now. Now, historically or previously, up until now, you would have to wait 6 months before you're allowed to refinance. But now, as soon as it's done, we engage an appraiser, and that comes out at 300. You can refinance 70%, 75%, even 80% as an expat of the new value. So you pull out the equity of the increased value, and that can be done ASAP. So the time in which you can execute these type of strategies has now been reduced to 0. Previously 6 months, and anything can happen in 6 months. And that ties up your capital for 6 months as well, as opposed to using it to making more money.
Yeah, I mean, we still have a minimum time that needs to be waited, which is 3 months. But we've reduced the time in half, so it's absolutely fantastic. Yeah. So everybody is probably already aware that we have common sense underwriting when we do our loans. I mean, specifically what that means is, instead of asking you for your tax returns and your pay stubs and your end of year statement or W-2 or whatever it may be called, we are only qualifying the rental properties off of the rental income. I mean, if you think about it, it just makes sense. So this is something we've been doing for a while, but not everybody is aware of that. So we talked about this the other day on our group loan officer call, Donald, and I think you brought something up about what's needed to qualify for this. Is it a one-to-one, or what specifically are we looking at?
Yeah, I think the audience, once they contact us to learn more, they're going to be really surprised and impressed on how easy that we've made this for foreign nationals looking to buy property for investment income. So the way this works is, like any purchase or refinance, we will have to, there will be an appraisal that will be conducted along with a rental comparison. And what that means is, if the rental comparison comes in at, let's just, for example, say 2,000, and your mortgage and mortgage related expenses comes out at 2,000 or 1,999, you qualify. It's not based on, like Robert said earlier, your pay stubs, your human resources needs to write you a reference letter. All these things that typical bank loans require, we don't need them. And it makes it easier for our clients, which are all outside the US, because sometimes there's different, there's time zone issues, there's language issues. And so we specifically created these to make it easy for our international clients to qualify when they buy property in the US.
Yeah. It's actually a fantastic loan program because, besides the reduced loan amount of $75,000 and not having to have US credit, being able to qualify just strictly on the rental income really makes it to where almost anybody can be a real estate investor, build your portfolio, and for the future have passive income. So the biggest update that we have, and something that Donald and I and our entire team has been working tirelessly for more than a year, is the launch of Morty AM. Morty AM is our mortgage application platform. Now what this does is it allows you to get a pre-approval in often less than 24 hours. This is an online application, but it is also available within 2 weeks on the Apple and the what's the other?
Android.
The Android store. Yeah, so it'll be easily downloaded, and you will have access to this anytime you want to buy a loan. You get a pre-approval, you get it into the system, you're talking to a realtor, maybe they're somewhere in some country, and you can zap them that pre-approval letter. So it's a really slick program. The application itself, it's really simplified. I don't know if, Donald, you want to touch on anything about, especially how we really worked very difficult in a very diligent way to make this application applicable to our foreign clients.
Yeah, everything we do for our clients. Like, we created this to fix a problem. We're a small company trying to fix a big problem, which is the trying to get access to US mortgages while living overseas. So we hear our clients, we hear the feedback, and what we've heard is that the world is ready for a digital solution. The world is ready to, for certain aspects of a mortgage, they're ready not to speak to somebody. Obviously, the initial call and the follow-ups and, the urgent questions, we're here for you. But a lot of the manual things, such as uploading financial statements, things that that can be on autopilot through this software, just makes the clients' lives a lot easier, and you could do it at your own time, as opposed to sometimes you get an email from a loan officer and you forget, and you go to work and you kind of miss a day here and there. Here, it's all online. It's it obviously sends you reminders, but it allows the process to be a lot faster than normally it would be when you're dealing with a financial institution back in the US.
Yeah, I think with this launch of this program, we've made our services even more valuable than most of the big banks. So it's really fantastic. And if anybody wants to download the application, or actually right now it's more of a link to the web portion of it, you can scan the QR code that is on this page here. So we will go to the next page. Okay, more big updates. As everybody is aware, because all of our clients are living and working abroad, we understand that they don't always have the ability to search for services or providers which you may have ready access to if you were living in the US. So we've made it very simple. We have on our website in the middle section, our concierge section, and on that, you can do everything from setting up an LLC for your company to own the property, to streamline your insurance with prime insurance coverage, to even getting the best rates on FX exchange when you need to move your money for, say, of a down payment, to being able to provide proper and adequate property management solutions through a company similar to us that only focus on foreign nationals. So another big update, and again, this comes from a lot of requests for our clients. We get clients all the time that get pre-approved for a loan, but once they get pre-approved for a loan, they don't know where to find a property, or they're not really sure where to find a property. So Donald has actually been the driver on the real estate portal. So Donald, why don't you tell us what we're looking at and what our clients should be expecting?
Yeah, so I don't want to I don't want to, what do you call it, unveil sort of the surprise, but I need to plug a report that we will be publishing in very, very soon, which is, this ties into what you just said, which is we analyze the price per square foot for every major city in the US and every major global city. And we also analyze the rental yield in every major global city and the top 100 cities in the US based on population. And the reason why I say that is because once, on your real estate journey, everybody has different criteria on where they're looking for. Is it close to my relative? Am I going for the highest return? Or it needs to be near an international airport, or it needs to, we all have different criteria, but finding the properties is difficult. So, that report's going to help you narrow down your search. It's never been done before. We're the first ones in the world that will be able to do this. So keep your eyes out for that. And that kind of leads into this portion, which is, when our clients, use us to get a pre-approval, first of all, you need a pre-approval to buy a property, because sellers won't sell you the property unless they feel comfortable that you have financing behind you. But being able to offer carefully selected and curated property that meets the needs, price point, and logistics of our international clients is very valuable. And one thing we're going to talk about this in the upcoming slides, but there is a 6 to 7 million home shortage in the US. That's why I don't want to preempt sort of my portion of the presentation, but getting property to be sold is like gold dust. So we've been trying for a long time. And so we've been able to secure homes just outside of Dallas, Texas, which is a really amazing location for gentrification. A lot of people working from home. But anyhow, I want you to contact us. We'll give you the details for that. The website is the link is up for the properties that we have available to sell. These are new properties. They come with property management. They're amazing. They fit the price point for our international clients. So we will, when we send you a thank you letter, we'll add the link to that email. So keep an eye out for that, along with the research piece that will be coming out very soon. Wow,
I'm very excited about it. I know, again, it's just like all of the things that we work to improve or to fix. This has been a huge contention for a lot of our clients. So with that said, Donald will discuss, is this the best time to invest in US real estate? And really, here's why.
Thank you, Robert. That was a fantastic presentation. I'm going to talk about really quickly kind of the current supply-demand landscape of the US. I know you read a lot of things maybe in the media. A lot of it is true, but a lot of it is not understood why. Now, interest rates have gone up a lot, but if you can believe it, home prices in the US went up 8% last year. I mean, that's unbelievable. Interest rates went up 400% and property prices still went up. Now, I'm going to address this in kind of a systematic format, which is supply and demand. So currently, over the last 10 years, there have been 5.5 million households formed versus homes built. That means there's, 5 to 6 million more households that have been created versus, homes that have been built. And like it says, so there's a massive, massive shortage, which you'll read everywhere when when you're doing your research. Now, those are new homes. Now, existing homes, which is about 90% of, kind of the transacted homes, 80% of the folks that have mortgages, 80% of those mortgages are fixed for 30 years under 5%, and 40% are fixed for 30 years under 3%. Sorry, that's a typo. Under 3%. So what that means is that, it's kind of put this supply grip on the market. And so if you think about it, what happens if new homes are being built? And this is also why it's been really difficult for us to get new homes to bring to show our overseas clients, is that as soon as homes are built, guess who's buying them? The average person may not be able to buy them at 8% fixed for 30 or 7% fixed for 30, but institutions can, right? And this is their playbook. They try to buy as much supply as they can because they know the supply demand is imbalanced. They control pricing. And this is no secret. You can Google institutional buying of single family homes in the US, and you will see, what's going on. So, like any smart investor, it's a lot better if you invest alongside smart people. And we think the folks like Blackstone and American Homes and these type of landlords that you see are fairly smart. So that's happening now. Next slide. Now, what's happening with demand? Now, what happened with COVID was that, people work from home. They went from, it was always kind of growing at 2.5% a year. So it was heading in that direction. But during COVID, overnight, it went to 100%. And I think a lot of companies realize that there actually is a portion of work that can be done at home. And I think that's allowed people who lived in different states to move to find work opportunities in other areas easier. Now, the US, it's a lot of things, but in terms of its ability to gentrify is without a doubt the best place in the world. If you can't afford to live in California, which many can't right now, you can rent a U-Haul and move your family to Texas, which a lot of people are now, and make a living. And you look at, what's happening in the US right now is, a lot of the coastal states, specifically California and New York, a lot of these big companies are created there, Facebook, Amazon, you name it, Tesla, and they become so big that folks can't afford to live there. So they, companies move their headquarters to Texas and, to low or no tax states. And that's happening en masse. And that's driving the demand to rent homes. And you're seeing that now. In fact, Dallas is the headquarters for the most global Fortune 500 companies in the world. And coincidentally, I don't want to plug our property again, but the new homes that we're offering at the moment is 40 minutes away from Dallas. So really want to show you those homes when we get a chance. So next slide. So this is really eye-opening. So if you look at the G7 countries, I mean, this is just, a select number. The rental yield, and this is cash flow received from rents, it's really low. In fact, I would argue that you cannot make money off renting homes anywhere in the world except Dubai and the US. Now, if you look at the average rental yield in the US, it's 8% at the moment. Now, if you take out California and New York, that actually turns out to be 12 to 15% gross yield. It's really hard to believe, but it's true. And there's just lack of information in the world about this phenomenon. So if you are sitting in these countries where you're making a good living, a good income, and for example, in Singapore or Hong Kong, where I'm from, getting in the real estate market is really expensive. It's minimum 2, 3, 4, 5 million bucks. Whereas in the US, you could play this game with 150,000 bucks, right? And enjoy, 15% rental yields. Now, there's obviously a lot of things that you need to learn. But like anything in life, if you put in the hard work, you reap the rewards. This is just a snapshot. In fact, I would argue that this is a little outdated. The numbers are even slightly higher at the moment, but you can see, this is not to say that, you should rush out and buy a home in Detroit or Milwaukee or Omaha, where actually Warren Buffett is from. But you look at places like Ann Arbor, a huge college town, University of Michigan is there. You look at Las Vegas, it's the center of all convention business in the US at the moment. Atlanta, the home of the busiest airport in the world. Each one of these cities represents a different thematic, and look at the gross yields. So this is one of the biggest surprise slides that when people see that, they go, oh my God, why didn't I not know about this? But now you do. And now with leverage, you can take advantage of this. So that's my bit on sort of the market. I will hand it over to Robert to go into our loan programs, and then towards the end, open it up for Q&A. And I look forward to that.
Thanks, Donald. And I think too, going back to just say the yield slide that you were showing, if you look at what the general yield is in the US, say 5% or less, that is taking into account the coastal states such as California and New York. But if you were to take those out of the picture, these are actually what people could potentially be looking at. And as you said, and because we do loans not just in the US, but all around the world, we really understand this probably better than any other country or company that are offering mortgages. Okay, so let me give a general overview of the mortgages that America Mortgages offers. Now, again, 100% of our clients are living and working abroad, but obtaining US mortgages, whether for purchase, refinance, or cash out. I think as we're seeing interest rates go down, we will see people just refinancing, not pulling cash out, but merely just to reduce the rate. So if you're a foreign national, you are able to get up to 75% loan to value in all 50 states. If you are a US expat, we try to make it exactly as if you walked into a bank in the US and you were living and working there. And for an investment property, you can get up to 80%. Something very unique to US mortgages, again, there are no age restrictions. So, I always like to say whether you're 19 or 99, you still have the same mortgage amortization regardless of the age of the borrower. We discussed what 10-year interest-only loans are. Absolutely fantastic. If somebody wants to maximize yield and lock in a rate to where they don't ever have to worry about refinancing again unless they choose to. We qualify on the rental income of the property for investment properties. It makes it a very simple, clean, easy way. We don't care if you are self-employed or you are employed. All we care about is the cash flow of the property, which again is common sense underwriting and just makes sense. Foreign income, if you are, say, a US expat or you want to qualify using your income, we absolutely allow it because, again, this is all we do, all we deal with. It's very, very common and very normal for us. Again, these are loan programs for non-US residents. Whether you are a non-US passport holder or you are a US passport holder living overseas. What also makes these programs very nice and why we have a lot of business, which is referred to from private banks, is all of this is dry lending. And if you're familiar with lending in Europe, most lending requires the borrower to open up some sort of account with the bank that they've got a mortgage with a minimum deposit. We have no requirement for that. This is pure dry lending, meaning there is no requirement to open up a bank account with that lender. A loan process in general, once we get your application, we're looking at 72 hours for issuing a pre-approval. With the launch of Morty, we can actually reduce that to 24 hours, if not sooner. Our average closing time is 30 to 45 days. and you can sign your closing documents in your home country without ever having to leave to travel to the US. So basically, you can start the application online through Morty, and you can close even at your local notary, depending on the country that you're in. What makes us also very unique, and a lot of it has to do with qualifying off of the rental income of the property, is 97% of the applications that get submitted are approved. It's a number that we're super proud of, and it's something that if for some reason the loan isn't approved, it's normally property related and not really related to the borrower. Again, and this is in the chat link for everybody to work with, we have 24 hours a day, 7 days a week, loan officers all around the world. You speak or you're more comfortable speaking another language, there's a variety of options, which when you're choosing a calendar time, you can click if you would prefer to speak Spanish or Chinese or whatever it may be. So I'll just go over a couple of the loan programs quickly, and then we'll get to the questions and answers. So our most popular loan program is the America Mortgages Rental Coverage Plus loan. And this is something that Donald and I had talked about earlier in the webinar and what I had just gone over. This is the loan program that everybody loves. It requires you to submit no personal income. So whether you're, again, if you're self-employed or you're employed, you don't show maybe your true serviceability of income, this allows anybody to still be a real estate investor. If you're a foreign national, you can get up to 75% financing, and a US expat, assuming you still have US credit, you can get up to 80%. No US credit or residency is required. It's a very fast, simple loan program. And the loan amounts are as low as $75,000 and can go as high as $3 million. Again, we offer on these programs 30-year fixes and interest onlys. If you look at how this loan qualifies, it's on the bottom of this slide, and it's a very simple process. If the rental income covers the mortgage, taxes, and insurance, the loan is going to qualify. So it's very straightforward. In the event, say that the rental amount does not qualify, it does not mean that the loan is not approved. It just merely means that maybe you have to bring in a little bit more money to be able to get that number to work. Next program is our expat program. If you are a US expat and you're living abroad and you have gone to your local bank or one of the big banks that are well known, you will find out that you're going to get halfway through the process before they realize that you're earning your income in euros or in yen or whatever it may be. And they're going to say, I'm sorry, we cannot do your loan. Well, again, because 100% of our clients fit this box, we've made sure that all of the loan programs that we have are specific for our clients living globally. If you're a US expat, we allow foreign income, we allow your bank account to be in a foreign country, and there's no requirement to provide a W-2. That is huge. The only real, I guess, caveat on this is you still need to maintain US credit with at least a 640, 680 credit score to qualify for this. The minimum loan amount is $150,000, and we can go all the way up to $5 million. This works just as it worked when you were living and working in the US, where it goes on your debt-to-income ratio. We have a debt-to-income ratio of 43%. So in this example, as long as you're making $10,000 a month, and that is your gross income, not your after-tax income, and the mortgage payment, taxes, and insurance are at least $4,300 and below, and including any other debt that you may have in the US, your loan is going to qualify. So again, we try to make this with the same rate, the same terms, and the same programs as if you were living and working in the US. Absolutely fantastic program. So that's it for our webinar for today. This is our contact information. for our office in the US, as well as our office in Asia, where Donald and I are both based. You can click on, or you can scan the QR code, which is on the right-hand side. That will link you directly to a WhatsApp messenger where you can reach out to one of our loan officers, ask a question about a loan, or even get the direct link for Morty to apply for a loan. Again, we have a link within the chat that allows you to schedule an appointment with a loan officer 24/7, or if you want to, you can go online and apply directly through Morty. So let's get to the questions, Donald, and let's see where we are at. So what I'll do is I'll ask the questions and then we can both kind of enter and see where we go. So first question is, what is the likelihood of being approved? Donald, do you want to take that?
Yeah, I mean, the short answer is highly likely, depending on what loan program you're seeking. But as with regards to specifically the loan program that we mentioned earlier, which is based on the rental income of the property, when you're doing your research, you have a pretty good idea of what the rents are, right? You look on Zillow or Redfin, you speak to your realtor. So you can do the math and you just need a few documents to get a pre-approval with us. Robert, you want to talk about what kind of documents are actually this answers the next question as well.
Yeah,
What kind of documents you need to get a pre-approval?
Yeah, fantastic. So to get a pre-approval for the loans, it is about as straightforward as you can get. Assuming you're a foreign national, you're just going to need your passport. And this is, again, on our portal, you can securely upload everything. So there's no security issue or trust issue on this. Go through, you can complete the loan application. And really the biggest concern or the biggest hurdle that most people have is the down payment for the property. So we need to see, for AML purposes, that any money that is going to be used in the transaction has been in your account. It can be in the US, it can be overseas, for a minimum of 60 days. If you're fine with that hurdle, then once you submit all the documents, your loan officer will review it along with the application, and we can issue a pre-approval in 24 hours. Next question.
Rates have come down, but will they stay down? Wow, that's a crystal ball question, but I think I can take a stab at this. Rates, I think we can all assume that rates will be cut, and these are Fed fund rates. Now, will they stay down? I think I can't see them going up. I think, inflation print just came out overnight, and they look like inflation's coming down, so there's more room to move the rates down. But who knows? But I would have to say over the course of the next, few years, I can't see rates going up, either staying flat or coming down, which is really good for being a property investor.
Yeah, absolutely. So, okay, next question. What would cause a loan application to be rejected? Well, I think there's a couple possibilities. Is if you're a US expat and say maybe you don't have sufficient credit, that could be a reason, or maybe your debt to income doesn't work. But we do have loan programs that will help you with that as well. For us in general, normally it's not about does the loan qualify or not. We qualify 97% of our loans. It's really, does the rental income cover the mortgage payment? And again, with that, it doesn't really mean that the loan doesn't qualify. It maybe just means that you have to come in with a bit more cash. Okay, next question. What is the most popular loan program in American mortgages? Funny, because that is exactly how I introduced that loan program. That is our Rental Coverage Plus. And again, if we go back to the question about, what causes an application to get rejected, this is the most straightforward, most common sense underwriting loan program that you have, where you're qualifying off of the rental income and not the personal income of the borrower. Next question. Hey, great presentation. Which banks do you work with for underwriting and disbursement? Let me jump on that, Donald, and then maybe you can add something. But last December, we actually became a direct lender ourselves. So we are able to lend in our own name, which makes it fantastic because we have a lot more control over the loan programs. Now, when it comes to loans that maybe don't qualify for our own lending, then we have a variety of options. These are banks that likely you have never heard of, but banks that we've curated over the years that understand our clients, being foreign nationals and expats.
Yeah, maybe I'll add a little bit of a little bit here. So it's we're preconditioned to think, well, most of us are, not you and I, but most people in the world are preconditioned to think mortgage, they think banks. However, in the US, most and the biggest mortgage lenders are not traditional retail banks. I'll give you an example that everybody knows, Rocket Mortgage. Rocket Mortgage is the largest mortgage lender in the US, but they're not a bank. They don't take deposits. And these are called wholesale lenders. So these are the type of lending institutions that we work with, and we are one ourselves, as we are a lender ourselves as of December last year, which is great. So this makes American Mortgages is the only U.S. mortgage broker outside the U.S. We created this process. We are the global leader, and just like I guess many restaurants like to use farm to table, we want to move higher up the food chain. So we've become a lender so we can give you the type of service, pricing, transparency, and accessibility that our clients need, deserve, and want. So that's a little bit of background on kind of our journey to becoming our own lender.
Perfect. And Raul, to answer your question, again, we don't use a normal bank, even for US citizens. We're going to use a bank that understands you as a borrower. So it's what we do is unique, and it really works when it comes to earning foreign earned income as an expat, which I'm assuming you are.
I'm gonna give a quick anecdote to our audience, and I think folks in Hong Kong can empathize with this. We had a client recently call us and said that their loan got rejected because they could not put a zip code into the little box that says, "What's your zip code?" because Hong Kong doesn't have any zip codes. And just because of that, they couldn't move forward with their loan. Now, this is just a microcosm and a small sample of kind of the issues that we're trying to fix. Like, we know the cultural and country idiosyncrasies of folks living outside the US. And this is just a funny example, but it's true and it happens all the time. But not with us, because this is all we do.
Yeah, absolutely. I would probably say 20% of our business is expats that were going through a major bank in the middle of a purchase to have their loan officer say, "Oh, I didn't realize that you were earning foreign income." So, okay, next question. Can a loan commitment be less than 30 years? If you choose, absolutely. If you want to have a 15-year term, that's your option. In general, our loans are 30-year fixes just because people want that safety and that security. But if you want to pay your loan off or make double payments or even have a reduced 15-year term, that's absolutely fine. Again, if you're qualifying off of the rental income, when you shorten amortization, that could be an issue, but is absolutely perfectly acceptable. Next question. How do we make sure that the rental price, I'm assuming this means, is accurate? And that's a super good question. And I think we receive this every day. When we order the appraisal or the valuation, depending on where you're living, we order a supplement to go along with that. That supplement tells us exactly what the average rent is for that specific property. And that's the number that we use to qualify. So it not only protects the lender, but it also protects yourself to making sure that this is the type of rent that you've been told by the realtor you're going to get. Next question. Do your loans have unit max or minimum? I'm not exactly sure what that means. Donald, do you have an idea? Or?
Yeah, so I think it's the number of doors per loan. I think you're going to be more of an expert on this, Robert, but I think the per loan, the number, I think it's a 4-unit max for four door max on some of our loan programs. I really should get more involved in the loans, but I apologize. I believe that's what this.
Okay, so yeah, if that's what it means, so a 1 to 4 unit, we can qualify technically as a single family. So you have the same LTV options that's available. So thanks for the explanation, Donald. Next question. You mentioned that you qualify most of your borrowers, and usually the properties fall down to a 3% rejected application. Could you give us an example of the type of properties that you will not finance? Again, very good question. If you look at, say, in New York, New York has a lot of co-ops, very difficult to finance. We won't do rural properties, so properties that are quite far away from the city center. And we really will stay away from mobile homes or manufactured homes. Otherwise, it's an open market. You find a property that you love, you want to be able to finance, you know it's going to get fantastic rent, give one of our loan officers a call and run it by them. They'll tell you immediately if it's going to be possible.
Yeah, and one thing, one thing that, part of that 3% that were not approved, a lot of that has to do with the property that you may have missed when you view the property. For example, in San Francisco, there's, part of the appraisal is looking at asbestos, which is in between walls, which there's no way you would be able to see that. So in different cities, they'll look at different things, the structure-wise, or what's in the walls, or maybe holes that you didn't see, and they don't pass the appraisal process. So a lot of times it has to do with the specific property, not actually you as a borrower. So that's really important to say.
Yeah, absolutely. Okay, next question. Some investor loans that fall into the better financing deals have a 4-unit max. So this is actually a really good question. In general, our very vanilla loan, especially the loans that we offer ourselves, are 1 to 4 units. So that is, we can do that every day. However, we also have loan programs that are for 5 to 8 units. So if you see something that you know it's a fantastic loan, we can still qualify, or fantastic property, sorry, we can still be able to provide that loan for that up to 75% loan to value, up to an 8-unit property. Next question. Can I close my existing loan midway through the tenor and reset my rate? So in general, a investment loan will have a prepayment penalty. So that prepayment penalty normally will be a decreasing amount that every year will get less, but it is still there for investment properties. However, it does not mean that you cannot, if interest rates go down and you're able to do a simple calculation of what the break even is, it doesn't mean that you will not be able to refinance your property at any time. If you wait until the prepayment penalty is finished, certainly you can refinance it without any penalties into either a shorter loan, or you want to pay it off, or even a brand new loan and pull cash out. Next question, and the last question of the night. What is the minimum down payment required to qualify for a loan? So in general, it's 25% if you are a foreign national with no U.S. credit. If you are a U.S. expat, then it is 20%. With that, thank you everybody for staying through this hour. This actually, I think when Donald and I were talking about doing this, we were saying we will probably knock it out in 15 to 30 minutes. But as you can see, with a lot of involvement and all of these fantastic things that we're able to offer, this ran a bit longer. So Donald, do you have any parting words that?
Yeah, listen, all I want to say is, and I say this to clients, is if you can make the numbers work now, they're only going to get better. It's because the cost part of your equation is going to go down, interest rates, and the income part of your equation is going to go up, which is your rental income. And then and because the property is increasing in value over time, which has been proven, that at some point you can refinance at a higher rate and recoup some of your initial capital expenditure. That's what makes U.S. real estate, the game of U.S. real estate investing, unlike any other place in the world.
Refinance at a lower rate.
Lower rate, sorry.
No. So, and again, I think just to kind of add to that, if you're waiting for interest rates to hit the lowest peak or the lowest point possible, you're going to miss out on what right now is still a buyer's market. So we always recommend get in there now. Rates are still absolutely fantastic, especially if you lock it in long-term, you do an interest only. So thank you again, everybody. Thank you, Donald. And we will see you, I believe, in a couple weeks for the next webinar. Appreciate everybody's time. Don't forget, in the chat box, there is a link to either doing the application on Morty or to schedule a time and day to speak with a loan officer. So thank you, everybody. Appreciate your time.
Thank you, everybody. Have a good evening.